Good day to one and all. This is Dr. Sipram of inoindices.com. So all are anxiously waiting for the ECB interest rate decision and also a press conference. Now we are at 12 GMT. I'm going to give you the spike trade call, the pre-ECB data release and the press conference. I'll take about 30 minutes to explain to you what sort of trade we can envisage during this particular time frame, so that we'll participate in the spike trade and try to capture some profit. I'll be using the live market quote page as a simple tool to read the intentions of the players. Besides, I'll do the market reading using the initial lows and the highs which are noted down around 3:30 GMT during that of the Japanese session. With the help of that, I will try to give you the trade calls. And also, I'll insist upon the trading strategy to be used in order to limit the risk and maximize the profit. Now, as far as European market is concerned, ECB is expected to announce the interest rate decision, and also during the press conference, you could come across the question answers, and probably that will give the sentiment of the ECB. So normally people expect the type of tone they receive it from Draghi and try to find out what could be the possibilities. Now here I am using the forecast algorithm to give it to you beforehand what could be the possible moves, irrespective of the hawkish or the bullish talk, or with regard to the trading, or with regard to the interest rate decision. So ultimately, my analysis says that the players control the market and they make the moves according to their requirement, and their requirement will be that they want to move the market against traders' pending positions, so that the traders will lose the money. And also many of the institutions, when they hold the positions for a longer time, they make the move in such a way so that they incur about 15% loss. Automatically they are forced to close the positions. So the spikes, they do it as a knee-jerk reaction for that of the press conference or whatever it is. The main objective of making the spikes or the quick moves or to give the surprise to the traders. Normally, what could be the surprise? First of all, the traders envisage a specific type of data release. For example, as far as interest rate decision is concerned, many may think that there won't be any change in the interest rate. So unchanged condition. In spite of that, they will make big moves in the case of Euro and GBP. Normally what happens, 12:45 GMT, the data release, the interest rate decision of ECB is announced. And invariably, you find the interest rate decisions vary only when US going for the change in the interest rate. Until such time, they will maintain the interest rate most of the occasions. So in such a situation, the players may not make any big move in the case of majors due for that of the interest rate decision. But in the case of BOE interest rate decision, that is the only data release, and subsequently there is no press conference, and the players try to give attribute to that of the other aspect associated with the interest rate decisions. Normally, how much of money could be pumped in order to hold the currency stronger. So that is how they try to review the market. So the ECB interest rate decision might be of some significance as far as the long term and the estimate of the strength and weaknesses of the currency based on the dovish or the hawkish sentiment created by the of the chairman. But what is most important is the spikes. The spikes, the players do it as a prelude to that of the actual economic condition. So based on the talk, they derive there could be a significant increase in the productivity or the strength of the economy, or economy may not go in line with that of the expectations. So these are all the two ways by which they make the move on the upside or on the downside. Now, even though ECB is pertaining to that of, or ECB reaction is pertaining to that of euro, still they will make the moves in other currencies and they will give different interpretations. Or they will simply say that the sentiment created by euro is being followed by others. So invariably you come across the spikes happen in all currencies. But the biggest spike is expected to happen in euro, but relative spikes could be seen in the case of the other currencies, depending upon the traders' pending positions. If the traders have not committed positions, then what the players do is they make the move ahead of the interest rate decision or the ECB press conference or any matter for that matter. So any data release time, if the traders are waiting for the outcome and then they want to enter into the market, they move ahead. Now we know that in the case of euro and GBP, day for yesterday they made the gain and then subsequently yesterday they made the drop in the case of euro and more significant drop in the case of GBP. So many thought that they are going to make it other way as a big drop. But subsequently today onwards, they started gaining the levels from that of yesterday US session close. Already they gained about 32 pips in the case of euro and come to the psychological level 1.08 area. And in the case of GBP, they made a significant drop of 150 pips from 1.27 area and they came down to 1.25 area and then started gaining the level. So this is how they will make wild moves during that of the yearly trend reversal time. They make a move in a specific currency in order to create the market sentiment. By making a big drop in the case of JPP, they were able to gain and make upward stop in around 114 and above in the case of USDM. And also in the case of USDCHF, almost close to 1.02 area, they met the upward stop and then started making the slide. So we need to understand that the players try to create the sentiment by making one currency move against the expectations of the traders, even though it is non-related to the immediate data release. The immediate data release is supposed to be immediate data release available is ECB press conference. But what they have done yesterday onwards, they started making a big downward move in the case of GBP. So people will be thinking that after that of the ECB press conference, euro is expected to come down. That is why they are holding it. So they give some excuse or some logical interpretation which may not have any relevance. Then this way they try to create the market sentiment. After doing it, they started gaining the levels. So invariably, you find the traders who have already taken around 1.0750 or 30 level, a sell position in euro, will try to average it when it gains another 30-40 pips. And immediately you'll come across that 1.08 is a strong psychological resistance. So when people talk about that, then immediately those who have taken the lower level sell have got no other option than to take further sell positions in order to average and come out with a net profit. But by doing quick successive sell positions, they will be over trading or overexposed to the market in a specific currency. As a result, when the market goes against, immediately the margin call fear will come in And that is why during that other spike, you come across the traders going for a distress trade. So invariably, the data release is used by the other players to trap the traders. That is why many of the analysts, when they are uncertain about the data release, they say that fundamental can be either way. It can be hawkish or bullish, or hawkish or dovish. So it is better to wait for it to settle down and later on you commit positions. But based on my algorithm, I given it on Monday and also day for yesterday. During that other spike trade call, I just explained that they are going to do the swing and rise during that of the ECB press conference and continue to gain in the case of euro during that of the US session. So this is the forecast derived from that of the forecast algorithm. Then ECB press conference is by 13:30 GMT and 12:45 will be the interest rate decision. There may not be much of a significant move at that time, but they will make small upward and the downward move to give different interpretations, and all will be waiting for the ECB press conference. So normally what they do is they make the move in the non-related currencies so that the traders will really get confused. Suppose it is pertaining to euro, they may simply make a move in the case of USD CAD. So people will be wondering why it has moved like that. So they always create the surprise to that of the traders. Once the surprise is created to that of the traders, they are under the grip of emotions. Once they are under the grip of emotions, they are not able to use the common logistics. Instead, they think whatever others say might happen in the market and follow some analyst and try to take some positions with a view that trend is the friend. Then later on, they realize that they are being trapped. Now, for that of the ECB press conference, euro and GBP are expected to make a false dip before that of 13:30 GMT. They could make even a dip during the start of the ECB press conference. By the time they say good morning to everybody, they will make a dip in the case of euro as if something has happened. And probably they will say that he doesn't sound to be hawkish. They give different type of interpretations. And the media plays a vital role, and they pretend as if something is going to happen like a miracle or unexpected. Then once that triggers the emotions of the traders are under the grip of fear, and you find the market fear is being triggered among the traders who are already committed positions. Those who are not committed positions wait for the market to say something. And if they understand the market is going to rise, afterwards during the next drop they wanted to buy. And the players are very, very smart. They expect the analyst to say that so that the market, when it drops, then they wanted to, during the retracement, they wanted to commit the positions. But later on, the players drop further and hit their stops, and then later on take it up. So we need to understand the timings of the market. Only then we will be able to really understand what is going to be the intentions of the traders. Now I noted down the initial lows and the highs around 3:30 GMT, and I wanted to relate it to that of the current market levels for you to understand what could be the possible moves. So this is how we should be able to derive it irrespective of the data release, so that we will be able to really participate in the right direction. The forecast give you a larger picture about that of the expected market moves. We fine tune it in which currency the forecast will be effectively shown. What are the currencies which might go against the forecast, or they may not make a significant move. Now in the case of euro, 1.0749 is the initial low and 1.0782 is the initial high. They just breached the high and went up to 1.0805 and still holding above that of 1.0782. So which will give that impression to the other traders we could go in for a breakout trade. But what the players are expected to do, they could make a further drop below that of the initial high, and people might think that euro could drop during that of the ECB press conference, and suddenly they will try to gain the level. So any dip is a buy opportunity around 20-30 pips below that of the initial high is a great buy opportunity. And in the case of GBP, the low was 1.2571 and that is not been breached, and the high was 1.272683. They breached the high and went up and come below that of the initial high. So they will use GBP to create the market sentiment. So when ECB press conference is happening, they will try to make a downward move in the case of GBP, and that will give that impression to the other traders that euro could follow. See how cleverly they have just made a brief upward stop and then started making the slide. So they made an upward stop without reaching the high low, and they are expected to make a small dip during that of the ECB press conference to create the market sentiment. But in the case of euro, they are still holding above that of the initial high, but they could make about 10-20 pips downward stop in order to hit the trailing stops below that of the initial high. And they may, if needed, come up to that of the initial low and breach them and hit the stops and go up, because the spread is hardly nominal, about 40 to 50 pips. So they could make some whip, some moves also. That is also the potency. Then in the case of yen, 113.15 was the low. They just corrected it. It was shown as 113.13. Then 113.86 is the high. They not breached the low or the high. So which indicate that USD yen, they may simply hold it when euro and GBP are in focus, and then subsequently they could make the yen to move and set the trend for the market. So USD yen could make a downward move. They are at the moment holding at the middle level, and as I explained that they have been holding around 114 day for yesterday and booking some profit and also build some sell positions. So that is how they make it. After that, they make a brief upward stop and then start making the slide, telling it's because of the economic conditions, they just made the drop. So they just make every move appear as if it is based on the fundamentals. But fundamental does not change second by second. Then ECB, then USD CHF, 101.0055 is the low they are set, and they just breached it and came down to 40, and 1.0082 is the high has not been breached. So which indicates that USD CHF, which is made a brief downward stop and started gaining the level. So similar to that of GBP, they are making a confusing move in the case of USD CHF, as if the market is going to reverse. Now, by making moves in other currency, they create the market sentiment, but they may not drop euro much, it appears, because already when they dropped euro from that of 1.0780 level to that of 1.07 area, many traders would have taken sell positions. So they would have trapped all those short sellers, and many of the people are of the opinion any gain take sell will be able to capture good profit. So that is how they created the feel in the market, and later on for the year end they are expected to make a big rise and induce them to go in for a big short covering. Then in the case of Canadian dollar, 1.3209 was the initial low, and they just breached it by 5 pips, and they are still holding it. And the commodity pairs lead the rally, you know that. In Australian dollar, 74.74 is the low, and 75.05 is the high. They just breach the high and come below. So here again, similar to that of GBP, they come below that of the initial high. So they are expected to make some small whips or moves and then start gaining the level. That is what the market reading indicates. But still, in the trading, what we do is we try to keep the buy limit order around 30-40 pips below that of the current market level. Try to take a chance whether they will be able to fill it. And this, I just kept it, assuming that it could revisit the low and hit some stops and go up, because they are making the high level consolidation, and probably they wanted to take it further higher on Friday also. So they could make a downward stop and briefly and then start gaining the level. It all depends. If predominant of the traders are short sellers, they may not even come up to that of the low here. They may simply just breach about 10 to 15 pips below that of the initial high and then start gaining the level in the case of Euro. Then in the case of GBP, they already made the dip. This is what the estimated level, 1.2670 area, can take a buy, and they could start gaining the level since they are doing it around 1223 itself, the downward move. So they may not make any significant dip before that of the ECB press conference. So they may simply hold, make sideways move and start gaining the level during that of the ECB press conference. Watch and take the position, use the hedge order to limit the risk, and the dip may not be very significant, it appears, because they had done it just about 30 minutes before that of the interest rate decision itself. Then in the case of Australian dollar 74.70, you can keep about 10 to 20 pips below. You can keep your buy limit order. And if it is not filled during that of the ECB press conference, then you can try to modify and take it. And then try to capture some about 75 pips profit in all. Then in the case of yen, they could make a quick upward move as a false move before making further drop. So when they come closer to the high, you try to take a sell position, then they could breach the low and come down below significantly in order to induce Euro and GBP to go up, and then the traders will go in for a short covering. Or those who are not participated in the market, but not taking the positions, might go in for a breakout trade. This is what happens most of the time. So many of the analysts, when they find that the market is very uncertain, they recommend breakout trades. So in such a situation, the players will go above that of the high and quickly reverse the market. So that the breakout traders will also try to lose the money if they don't book profit in the market during the quick move. So invariably understand that the players are here to trigger your market fear and market greed. So when they trigger market fear and the market greed, then automatically your mind is not able to use the common logistics to take the appropriate decision. Instead, your emotion try to tell the mind as if the world is going to come to an end or your profit will be unlimited. Then automatically you just either cut loss or you just allow the loss to grow. Then later on you find that you are trapped vulnerably. So keep in mind that the players are here to create the market sentiment and act against it of the traders. So you need to really watch their moves and trade accordingly. So reading the intention is vital. If you've got any question, you can ask me. I'll be willing to answer the question. Yes, Bren has got a question. After the stop and happens, and let's say high, for example, has been breached for first time when 1 hour, it is okay to enter it. Intentional move and a pullback. Yeah, you can do intentional move after about 30 minutes. After about 30 minutes, the European session gets over. Then you come across the pullback will happen during the gap time. Then during the session, they will start making the small swing near that of the low and then start gaining the level. So they might give a knee-jerk reaction on either way, but you can take the position when they are making a small dip. And if it is an intentional move, that means they will continue to breach the new high every 30 minutes. And already they have started the intentional move. 5 pips if it comes back down below high. Okay. Yeah, we can take about 5 to 10 pips below that of the initial high, the buy positions. Please, another question that I have is for the cross entry and exit. You have said that wait 30 minutes until making an entry. Yes, basically, you watch the currency and see the behavior of the currency for 30 minutes, whether they are near the low or near the high, whether they are willing to breach the low or just breach the high. Then by you'll be able to get the real sense whether you can take a buy or not. That is why I want you to wait for 30 minutes before committing a position. Don't be in a hurry. Market continues to give trading opportunities. I wanted to know if you could take profit within those 2 hours in the mid session. Yeah, you can book profit or you can keep stop at entry, wait for the late sessions to happen, make the quick move and book more profit if you want, or use a trailing stop and that will take care of your trade. Should we wait until the price has reached the close to the high? Yes. When you are taking the buy position near that of the low, and wait for the opportunity to book profit near that of the high or above that of the high or new high levels. Or aim for about 75 pips during the spike trade and 45 pips during that of the swing trade. If they are making a big spike, wait for 150 pips net change level and maximize the profit at the end of the intentional move. So it is identifying the type of move is vital. Thereby you can calmly wait without any ambiguity and confusion. Any other question, please? Okay, these are all the trade recommendations. So I'll come by 14 GMT and try to explain to you what happened to that trade calls, what I have recommended, and also explain to you what has happened in the market in all 4 majors and 2 commodity price, so that you will be able to really understand how we will be able to envisage the market moves by reading the intentions of the players. Wish you all the best in your trades. See you by 14 GMT.